Hey everybody, welcome back. Well, I'm going to leave these levels here, S&P 500. We're going to walk through why they're here. But overall, it was an okay day. It wasn't great. We saw rotation. We're going to go over that rotation, what I think is going on. Micron, we need to talk about that as well. There's a couple key things that I think are important, but I want to start here with just the 5-minute. And what we're seeing is we're just constantly in this range lately, aren't we? Same levels over and over again. It's like Groundhog Day, and you can just see them. I'm going to leave them in here for a second, just so you can look at them Wednesday, and then just kind of carries through. Watch this when I go to the hourly, and let's just zoom out on that for a second on an hourly, and look at June, and realize that besides these little step-ups in the beginning, since we hit that blackout period, if you remember, we went through that blackout period. We've been going through this for about 2 weeks, but I want to show you how it's starting to take effect. So on 6/12, 6/13, 6/14, really 50% of all S&P corporations had their blackout window where they are not allowed to buy stocks. Now, you may think this doesn't affect you because you could say my stock doesn't have a buyback period. Why it does affect you is because they are going to continue to not buy stocks. Therefore, it increases supply across the market. What I want to show you is that you can see it live. You can literally look down here on June and look at how you popped over, and then once the 14th hit, that was really it. You've been in the same trading range since the 14th. So if I clean all these off and we go back to that date, I'm going to pull this over for a second. But if we just go back to that date and we mark the 14th, 13, 14 right here, we just leave that mark right there, leave that demarcation for a second, and just drop a pin. Right? So if we use that as a pin and then look at this level, and we'll even use this low, and then we'll use the top of this bar. I think this is important. I think this is really important to get, and I'll explain why in a second. So here's your range. That's been your range since the blackout period started. And if we measure the top of this down, you'll see that you've been in a 2% trading range for the past 2 weeks. Meanwhile, they have us running around like a chicken with our head cut off. Is this going to happen? Is that going to happen? And quite frankly, people are not understanding why this is happening. Now, are you going to get enough of an, let's refer to it as to lift us up or drop us down? I'm not sure on that. We've got a lot of mixed data here that we're about to go over that I think is very pertinent, and then you're going to have to make your own decision. But there's a lot of really important things to go over. Now, I'm going to link some of these, and then they're going to tie into slides that you saw last week and that you'll see on Saturday. Remember, Saturday is the long video. But people are looking at these moves after hours, and they're going, wow, they're crazy. And to some extent, they're right. This was a really interesting chart put out by Goldman, and it goes through a couple key things. Now, I have shown this before, so I want to just give a refresher. If you look at this level right here, it's going to tie into this 4. You right now on earnings days, these moves this quarter are 4.5 times. That's 4.5 times what you normally are getting on average 25 years on earnings. That means you're going to get a lot more volatility. Now, cycle that through with what you're seeing out there right now. And we'll get to Micron in a second, but this is exactly what I'm talking about. Look at this move in Micron after hours. At the time recording this, the conference call is going on. But we were looking for a $20 move one way or another. Well, you got a $20 move. You got it in the first minute bar, and now it's trying to work it off. We're going to talk about this in a second and determine what you think, if you think it has the ability to go back to break even or go higher. And we will address this in a moment. But as we mentioned earlier, you have these huge, large tech fund flows that came into the market. And what are they doing? Well, they have to go somewhere. So they're going to go into the leading names. Now, whether or not that continues or doesn't continue remains to be seen. But we do have all this volume, and we do have all these inflows. And it's not at the 4-week all-time high. But as we talked about before, and you'll see, hopefully, the reason I'm doing this is because of your comments of how all this ties together when I show you these slides on Saturday. And my one comment on Saturday was, yes, this looks impressive. But when you look at the 4-week level, you start to realize that you've been to this party before. And then I showed what happened at this party and how this can go on for some time and how you have huge volatility. Remember, if you're a trader, volatility is your friend. But what we've seen so far in semis is they're not getting that lift. Now, if we take semis and we turn them into just a very simple bar chart, and then we overlay them with IGV, which they usually follow together, and we've gone over this again, but look at what's going on right now. The SOX is coming down, IGV is going higher. If we drill into this on a 15-minute, we get rid of the pre and the post. I'm not gonna have time to edit this because in between this, I actually have some conference calls I have to get on, and I actually am trading in between this, so unedited it is. But if we look at that over June, you can see which one's outperforming, IGV. So IGV is playing catch up and has been since June. Because if you go back to different time frames, even if we just go back, let's just go back to May so you can take a look at it, you can see this, the disparity. And the disparity just gets wider and wider as time goes on. And that is not a disparity. If you go back to 24, you can see the separation here and then we never really came back from it. But they're trying. They're trying very hard to get it to come back. If you look at it just on go back to like 24, 25, and you'll see the volatility. But look at just how it's like just acting like a stalwart versus the SOX that's all over the place. So we are seeing that connection, but we're also seeing rotation. So if we go to when the blackout period started and I overlay XLC and IGV and the SOX, what have you noticed? Since the buyout period or the blackout period started, when they were all right at zero, they were all aligned perfectly. What do you see happen? Well, you start to see semis completely fall out of bed once that kicks in. And then you see IGV and XLC being bought. Now, the reason for this could be a couple reasons, and we could discuss this, but you could see a diversification. I think it's happening for another reason. I'm going to get into that reason. I'm going to get into Micron, but there's some developments that I really want to show you. So I'm going to start with probably the easiest development for everybody to understand. If you're not saying AI on the conference call, you are not hip. It's actually getting to the point where it's increasing, not decreasing. And I think this is very important. If you're not saying AI, you're not cool anymore, I guess. And so everybody's saying it. It's up 40% from where they were saying it before. You're up quarter over quarter. At the time of this, I was listening to Micron's call. It's why this one's going out a little late. I heard somebody had a hard time with that the other night. Not much I can do about it. But what you're seeing here is them saying AI over and over again. And then they're just literally watching their stock price. I think last count, it was 472 times within 15 minutes they said the words AI. And then people get all giddy and the stock trades up. And then they realize they just own a stock that just kept saying AI. So this is an issue. The question is, here's what I think happens with this and why I'm showing you this graph. Just laying it all out there. At some point, someone's going to say, you keep saying AI. Are any companies that are buying AI products making any money? And that's called monetization. And this is kind of when the tech boom it's come to Jesus moment, as we call it, like, okay, what are we doing here? And this is one of the things that I think is very important for us to figure out. What are they really doing? Is there money to be made? The answer is yes. But to what end? And this is kind of where Micron ran into a problem with margins. We're getting there. Now, in front of you, I want you to understand where I'm going with this. I want you to understand why we're becoming the only game in town and why you can understand that we're going to see volatility. Remember, the volatility is going to increase. We talked about the skew. Now, for those that don't remember, and please comment on this, I'm tying this all together and showing past and future graphs because people will say, well, what is the skew? Or they'll say, hey, can you go over this concept again? It's your comments that are actually driving the content that I am producing. Because the goal is to create the most information that I can and the most actionable and tactical strategies that I can utilize during the day. I'm showing you what I look at to make informed decisions and some of the stuff I've used over 25 years. But if you're looking at the skew, remember, they were tightening. And as they tighten, they don't need us. Right? They don't need us. They're not worried about us. When they're tightening, you have high cash positions, and it doesn't really require any hedging. When they go to an easing policy, which globally we've gone to an easing policy, please listen to those words. Globally, we've gone to an easing policy, which is exactly what Nomura talks about here. Now, when you do it globally, it affects what? Everybody, because you're doing it how? Globally. This is coming home to roost already. It's already becoming an issue where inflation's starting to peak its head up in certain areas. And I'm going to show you what's going on in Germany, and it does tie directly to the US and why you need to be aware of it. We're going to get more into this later, but understand the concept. Skew, if they're tightening, you don't need to hedge because you're in a higher cash position. Easing policy, and when it's global, steeper skew, greater volatility. That greater volatility, this is from Goldman's trading desk, and it was just a snapshot. You're swinging 400 billion a day. Look at the volatility and how the skew has changed, right? The volatility has changed recently. So in my opinion, Nomura is right on that. And that's how you should be looking at your trading. Your trading, for example, when we look at NVIDIA, because we'll talk about why we're going to look at NVIDIA here. But as the market goes NVIDIA, and that's not just me saying that, that's pretty much the world, but your trading needs to be reflective like this. So this is what we did yesterday. It was really clean, like 122.50. We saw a reason we got in. I'm going to do a video on swing trades and short-term swing trades because of your comments on the other videos and showing more of what I did with that price action video. I'm going to link that price action video at the end of this because those concepts could have been used today very easily by anybody. So I'm going to link that again at the end. It's 11 minutes. You might want to stay and watch it. If you don't have the time, put it on double speed. And I appreciate the comments on that because it makes it better. I'll make it better. But what did I do? I didn't play games. There were no games yesterday. Okay. It was just getting out. Okay. NVIDIA up 3. And then we bought some calls. We actually did well with those. We would have done better had it opened where it was supposed to open, where I wanted to open when you were pre-market at 130. But then 5:30 this morning, I'm looking at it and going, all right, I'm up 7. I got to trim. I'm up 5. It's 8:30. I have to trim. And why are you doing that? Why am I acting like that? I'm not going to bore you again with the skew graph. But when you come here and you start looking at this in the morning, once you start breaking, you might want to remember this, and this will save you an inordinate amount of time. Always watch where retail is at 7 o'clock. Always watch what retail is doing at 7 o'clock. If they can't hold it, they've got weak paper hands and they can't hold things. They just blow them out, right? So you know, and you can use that to your advantage, but you have to get out before them. And you always want to watch 4 a.m. What's Asia doing? What are those crazy kids doing when they get access to the market? They were going hog wild, and by 7 a.m., retail was in a full tizzy. And then you can just see what happened, the gap down, the rally, and you can mark off the other levels. But you have to understand the game's changed. So you have to, it's really adapt or die. I hate to be that cavalier about it, but if you were to take a step back and you were just to look at this chart, and this is very important, so just please stay with me. What do you see here? Really tight bars, right? Look how tight these bars are. What's happening here? Look how wild these bars are going. So you can look at Nomura's skew chart all you want, and you can go blah, 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 whatever. Meanwhile, we'll be over here pulling money out left and right. Okay, once you understand that the game has changed and the rules of the game have changed, you change with them. And so I would suggest that looking at high beta names with shorter term swing trades is probably going to yield optimal results right now. You might want to listen to that again. Okay, so as goes NVIDIA, goes the NASDAQ. And so what you have here are the Qs and NVIDIA lined up. Redfinivis, they put this together. And I know I butchered that name. My pronunciation skills are not the best. But if you take a look at this, you can see exactly line for line what's going on. That's why you care about this. Now, when I say we're becoming the only game in town, I want you to get a couple concepts. And we're getting to Micron in a second here, but I want you to get this concept. In front of you, this is by a firm, Macro Bond, right down here. And it's from a publication that I read. I got it out of Lloyd Bank's Market Insights. And they're really just a bank in London that focuses on European bonds, but they really laid it out perfectly here on sector net balances. Once they cut rates, what happened? You got inflation again, but you got inflation in only one section. You got inflation in Germany only in the services. You didn't get inflation. Let's change that to this. It's Epic Pen for those that want to know what I'm using. Sometimes I got questions about it. So what's happening right here? That's positive, right? And there's actually a box, but excuse my childlike drawing. But what happened here? When you cut rates, look what happened. Look what's going on here after the EU. This is still falling off a cliff. You're still seeing manufacturing drop. Well, just to put this in perspective, and we went through this a little bit in the pre-market live, which we do every morning publicly at around 8 o'clock. We went through this. You're getting more inflation on the services, but manufacturing is what's driving Germany, what's driving Europe. So here's the issue. If this continues to get weaker and this goes higher, you have a problem. The US starts becoming the only game in town if this continues, but it's actually worse than that. And this is what I'm saying. We are becoming the only place. Now, and I mean that, and it's happened before where Europe was the only place. Europe area data surprised to the downside on weak manufacturing data. Okay, so here's EU data on the Europe Map Surprises Index. So this is manufacturing and this is headline. And now headline's going to have what with it? They're going to have the two components, right? And this is by a firm called Haver right down here. And they're going to have the two components. But we're falling off a cliff. Like this is really bad. I actually wish they would have shown this so you could see it fully. If you could see this actually with the pandemic and realize that it's only ever been worse since the pandemic. And even back then, it's never, after that, it has nothing there. So this is a real problem, what you're seeing over there. And we're not seeing any pricing power. This is another graph by Lloyd's Bank. And this is kind of important as well. CPI inflation according to import intensity. According to import intensity, devil's always in the details with this stuff, guys. Right? It's always in the language. So when you look at this, the very first thing you'll note, you can spend more time on this. I'm flying through this to get to it so you can understand where my head's going with this. Look at what's going on here with the blue. Blue is energy. You are negative, and they cut it off for some reason. It was really dumb the way they printed this thing, but it is what it is. But if you look at that, look at where you're at. You have not had this kind of, there's no other word for it, but deflation with energy prices in the UK in about 20 years. Now, it's actually worse. You have more deflation now in energy prices in the UK than you had during the pandemic, than you had during the great financial crisis. So in other words, the only growth that we're seeing is coming from the US. Now, that said, there are other pockets. Like you could say, oh, well, Argentina. Well, how big's that stock market? It's not that big. You could say India, but now you're getting into emerging markets, right? You're getting into a different classification of assets. And so what happens with this is firms and pension funds are not going to invest in India. They're going to invest in the DAX. They're going to invest in what's going on if you were going to invest in France. But France has their whole litany of issues right now. So the issue really that I want you guys to grasp is why could this market stay higher, or why could this market keep going sideways even though we're in the blackout period? Why could people continue to buy names like, Micron or NVDA or Rotate, and where's the money going? And we're getting to that. But what I'm seeing is, and what I want to leave you with before I forget, because I want to get through this one part that I think is very important, you need to start looking at who's got the most cash flow and who's got the most liquidity. Investment firms are going to go to liquidity like no one else. They're going to go to the Microsofts of the world, okay? The bigger, the better, the safer they're going to feel. Liquidity and cash flow is going to be it. That's where they're going to put their money. We'll get more into this concept on Saturday, but I purposely recorded this video while this was going on because I wanted you to see that when they stopped saying AI, how is it going to act when you got to the question period? And you can see when they said AI 482 times and it stopped and now it's time for Q&A, what happened? And you can see what happened. As always, if you're new, you might want to subscribe. You might not if you don't find value, but I think there's a lot of value here, so I would subscribe. And this all stays linked. The other thing you always want to do is drop that anchored VWAP. And for those guys that listened this morning, you probably killed it. We killed it in the room on this. The Rivian trade, all you had to do last night was the same exact thing, was just drop the anchored VWAP exactly where I'm telling you, and you could see where it broke. You always drop the anchored VWAP after hours, not during the day, right? Always. You can always do the peak too. The other thing I should leave you with before we get into Micron is this. If you're not doing this, I don't know what to tell you, but I keep going over this and we're doing this and it's working very, very well. See these peaks that are in these charts, like here, okay? You want to drop these peaks, but the real peak that you really want to use is the main peak. So you go to the main peak of your chart, pre or post. I don't really like the pre or post for the main peak because that could be from Asia. What I would suggest you do it is the post or the regular hours, the regular hours. And what you saw today, I had a trade on, I couldn't get out of it fast enough. They pulled the flim flam right on it, right into it. And then they gave me this doji. They made me feel warm and fuzzy how they pushed it over. They gave me the doji. And you can ask anybody in the room, I'm like, that's it, I'm gone. And, I really like the stock here and I really want to own it, but price is price. And when I saw it, I'm like, I have to go. You want to do this on all your charts. If you do this with Micron too, if you just want to see how this would have played out, you can go do this on any stock that you're looking right now, just pre or post, right? And you'll see, look at the battlegrounds today. It was right there. It was all day long. And this is really very important to get. It's a very important concept. And I leave them there and you'll see pinches. The other thing you can do is drop one on the recent low and you'll see the pinches. They're called VWAP pinches, but we can get into that later. But let's get to this data. And again, I appreciate you not dealing with or having to worry about the editing, and we'll go from there. But I'm going to hammer some of these points home that I think are pertinent because people are going to look at this and are not going to understand what the issue is. And the cash flow was off. And the cash flow was off very similar to what happened with SMCI because they're being squeezed on margins. It's that simple, no matter what anybody says. So here you are, Micron, 62 cents. And everyone's okay with that, the 62 cents. No one really cares about that too much. Let's change that to blue. Yeah, that's better. So no one really cares about that, right? But what's happening is they're looking for the future guidance, not the past guidance. They're looking for the future guidance, not the past guidance, right? So here you are and you beat and everyone's happy. They're doing great. And then you see $1 by $1.16 and you're happy with that, right? You were looking for $1.05. You take these two numbers, you divide them together, you come up with like 108. Oh, we're doing okay. You're telling me 7.4, 7.8. We're at 7.6. Okay, well, that's groovy. You're telling me we're in line. The issue becomes when they start talking about margin. And these are not the margins that you really want to see right now. And this becomes the problem. They see demand out there, they see expanding demand, and that's great, but they're being squeezed. And if you're being squeezed on the margin sides now, you're going to be squeezed on the margin side later. So what happened here was this. Down in literally $17 or $19 in 1 minute, okay? And what happens with these kinds of moves is the Skew is going to do this. Now, what happens tomorrow? I think you're going to get some defense of the name. Do we trade up on it? Maybe, maybe not. What I would do if I was you is I would look at the key levels. I use a 12, a 22, and a 55. I would use whatever you're comfortable with, but can you get to the 55 today or tomorrow? Yeah, you can. You could get there. Remember, the Skew's changed drastically, but I would also look at that support level and go from there. I would also watch how the other semiconductor names respond to it. That's it.